Good morning. Hope you guys are doing okay. Can you somebody confirm that you can hear me? And it's, yeah, you just confirm that you can hear me, please. All right. Man's in the house. So yeah, about this. Oh, S-Pill is in here. Sounds good. All right, starting with our process. As we've been anticipating, overnight is going higher. We're above previous month 50% NFP Friday, so we're allowed to sell risk premium. We're allowed to buy equity space. Equities, we're allowed to look for the low of the day between 5 o'clock and 11 o'clock in the morning, Eastern time, right? Everybody was so scared yesterday. And yesterday was a hard trading day. That's why on those kind of trading days, you have to mechanically trade your systems and then have a stop. Like, you stopped out 2 times, I'm done. Okay, so now that we've started the bullish move and we started that on September 11th, right? Now we're going to go to a weekly. We're going to look at our fixed constant variables that we can measure the variance of, right? To see if the market is overpriced. Right now, we are at 2.41. So remember, we start looking. This part of this step is to see on the weekly chart: is the market priced in too much or overextended based off of the economic news calendar or the earnings cycle or whatever the news is moving this market, right? Did they overprice? So we start looking for reversals and slowdowns between 2.5% and 5%. We talked about it last week, where this week we were going to come up here and take out this month high, possibly get near the highs, and then week 4 of the month would slow down. Week 1 would let everything catch up, because what's the purpose of this? Remember, I tell you guys, like, this step, the purpose of it is like to understand that yes, moves happen, but it has to slow down and catch up once it gets to a certain percentage. Why? Because behind this pricing algo is thousands and thousands and thousands of people in different departments doing life cycle of trade orders, right? And I'm not saying buying and selling pressure is what makes this pricing algo. Well, it is a facilitation of, but it's not the way you guys would think it is. But that slowdown period is allowing, the clearance and settlement teams, the prime brokers, the collateral and margin teams, book interest, just different things like that, right? All right, so we are at 2.5%, and so that was when they cleared, right? We've got Thursday and Friday left of this week, so we can anticipate this to be acceleration Thursday and not it could be a turnaround Thursday, and it will be obvious if it decides to be a turnaround Thursday. Considering that we've already taken out previous day high, being the clue where momentum is shifted, right? We can expect, either this is going to be a retest or a trend day, or this is going to be a heck of a bullish day, right? Okay, moving to this chart. So we expect low to be looking for lows of the day between 5 a.m. and 6 a.m. Right. This is Sunday 1800 to 1900. This is the Tuesday 9:30 to 10:30. The DR community trades Tuesday to Tuesday. The ICD community trades Sunday to Sunday. They use these ranges to see, can we step below and then go above it, right? To indicate if the low of the week is in. And so far, both the Sunday and the Tuesday, we stepped below, and now we're getting a swipe in. So during the day at some point, this Asia 1930 could be the low of the day, is what I'm saying. However, I do anticipate a swipe down to go up, right? Let's look at another one where Asia was the low of the day. This was the Asia low of the day right here. Red is Asia, white is London, blue is New York, right? We swept down, made an obvious low of the day for the RTH, and then ended higher, right? That's something that's kind of like the daily profile that I'm anticipating for today. Okay, now we're going to move on to the next step. And one thing I'm working on right now is for these two charts that I use, like being able to share the layout, because somebody told me that if I share the layout, then you guys will be able to pull it up and have the live updates in the levels on your chart. So we're going to do that. And then like, I think if you make a copy of it, it still updates the levels as I do them. So I'm going to get these two layouts built with stuff that everybody should have access to. So you guys can have the live levels on your charts and you don't just watch me put them on here and all that, right? I just have to figure out how to do it. All right, moving on. So let's put our highest probable trade on the chart today. Okay, for this step, we know that momentum is to the upside, right? And this happened in the Globex session. So we can anticipate them to bring it down at between now and 9:30. And if they do decide to do that, obviously we're going to pay attention to this 50% midpoint. We're going to pay attention to previous day's midpoint, which is right there. But then we're going to anticipate for price to close higher. Number one, like we're above NFP Friday and previous month 50%. So we already anticipate to have a close higher than the open. And number two, we've seen that stat play out so many times. All right, so now we're going to put our probabilities on here. We're going to start with our time-based probabilities, which are going to be one for midnight, one for settlement, and one for Globex Open. And 1800. All right. Now we have our settlement, our Globex Open, our midnight, our time-based probability. Good morning, everybody. Now we're going to put our structure-based probabilities on. All right. So the lowest low is at 1800, 1915. So this 1800 has on the 15-minute chart, this 1800 this has 84% probability. This 1930 has 87% probability. So structure one. make this a little bit smaller because on the live my live price chart is driving me crazy having all these big lines, so I'm trying to do some cleanup. Alright, so this has an 87% or 86%. 1930, 87%. So yep. And so the highest high, remember the structure-based probabilities are based off of on the 15-minute chart, whatever the lowest low and the highest high between 1800 and 06. Those are where we're getting the probabilities. So we're going to say that the highest high for structure 2 is going to happen at 5:45 since we're near the top. Ooh, let me put the price in. So this is at 19,984, and this has 0.545, an 82% probability. And this one is at 19,633, and it has an 87% probability. So now that we have done that, see, that looks a lot cleaner than big bulgy lines. All right, now we're going to use one. This ICT Sessions One Setup for Life, MK by MALK 1903. Put this on our chart. Red, white, blue. Red, gray, blue. So let's switch this to white. All right, now we're going to go. We'll put the Asia from 19. But actually, this is the London. 1930 to 2030. We're going to do this white one, which is New York lunch. We're going to do 03 to 04. And this blue one will be 9:30 to 10:30. And that's going to draw out the initial balances for each range market. We need to turn off the rest of the stuff. So we don't need our RTH gap. We don't need the midnight open or the 8:30 open. And then now, I wonder if I can do the midline on this thing. Oh, we can. Look at that. All right, so now it shows the midline. Okay, so now this is what, and I'm sorry it's taking forever, guys, but the coder is coding this statistic up right now, where we will be able to just use TradingView and no database to get this information that we're about to go over. So far we've identified the momentum. Let me make sure nobody's chatting. All right, cool. So far we've identified our time-based probabilities, our structure-based probabilities, and now we're going to do our projection-based probabilities. Our projection-based probabilities are going to be standard deviations off of this range, which was a hell of a range, right? So we might not use, yeah, we're going to still use them, but we're going to put a weighting on the higher ones because this range was beyond abnormal, right? We're going to maintain our expectations, right? But basically what Asia did, right? So we know it went long outside of this range, and what London did, it went long outside of this range, and that we haven't broken the midpoint or any of that. We're going to put those variables into our database, and it's going to give our projections probabilities. So let's do that. Okay, so Asia was a long. We never came back to the midpoint between 0.2 to 0.3. We never came back to the midpoint since London. So that's a true. It held this low. So that's true. London has been a long. And right now we have two scenarios that we have to focus on. London stays true, stays above its low. So it stays above this low, right? Why is my dog's outside? Barking up a storm like a bunch of morons. Alright, so scenario one, right now, based off of this, is London stays above its lows between now and 8:30, right? Scenario two, it comes back and breaches that between 8:30. And even these probabilities will even shift if we come back and take out this low and this mid during the New York session. But because I'm not live during that time, that's why I told you guys to really pay attention to that midpoint and in your mind think about what that is telling you. All right, so if we stay under this scenario, right, 9:30 to 10:30 above London low has 45.97, so 61% that will be above London. And Gulf London has a 10%, 16, 5, 21, 26% below London. So this is the probabilities of New York being above London, low. So being above this from 9:30 to 10:30 has a 61%. Now here's the crazy part. The 10:30 on has a 50% probability of being short and a 45% of being long. So what does that mean? So let's go over this for the first time viewers real quick, what I'm even talking about. I just did my settings. I literally just did that, Lee. Look. Here's my sessions. All I care about is 19:30 to 20:30, the 3 to 4 o'clock, and the 9:30 to 10:30. I have those marked out, red, white, and blue. And that's it. Just shows these little boxes on my chart. This is Asia, 19:30 to 20:30. This is London, 3 to 4. This is 9:30 to 10:30. And then for me, it's about the relationship of what it does until the end of the session. So ICT community kill zones are from 18 to 02. DR communities from 1930 to 2030, and then what happens until 02, they pull statistics on. ICT communities, London kill zone is from 2 to 8:30, I believe, right? DRs is from 3 to 4, and then they use what happens from 4 to 8:30 to pull statistics from. ICT's New York kill zone is from 9:30 to 10:30, or no, 9:30 to 11 for New York AM, and then 1300 to 1600 for New York PM kill zone. DR community uses 9:30 to 10:30, and then they measure what happens within that range from 10:30 to 1600, and that's how they're able to pull probability. So you're all using the same stuff. It's just like how you use it is different. DR uses it to pull probabilities from. No different, no worse. Okay, so for the new viewer out there, what we just pulled for our projection-based probabilities every day. There it is. So if we're saying this is our 9:30 to 10:30, what this means above London 61%, that means 9:30 to 10:30 has 61% probability of staying above this low right here. It has 10% probability of engulfing the 3 to the 4 o'clock high, and it has 26% probability of being below this 3 to 4 o'clock high. Then from there, at 10:30, it has 45% probability at 10:30 to 1600 of maintaining this low and going higher. It has 51% probability at 10:30 of maintaining the high and going lower, right? So that's what that's telling us. Because we don't move in a parabolic move like this. This is when common sense comes into play. And we're going to literally bet on the engulfing London by 10% to end higher. Why? Because remember what our system told us. We are, I got to fix that. That ain't acceptable. This should not be shown on this chart. We're above NFP Friday high, previous month 50%. So we expect to end the month higher. We expect to have up close days on a bullish trend. So we are saying that 45% long is more likely than the 50% short. 50% short is still going to can still happen. It's just we expect if it goes short to have a false day and end the day above this 9:30 to 10:30 high. All right. So now what we're going to do is we're going to put our projection-based probabilities up. See, this is wild. We're not going to put them all up today because there's no sense in it. Right, we have an average daily range, and we know that we're probably going to have a trend day today. Because it's been a couple days. 2128, and this has an 88% probability of being hit. Okay. Let me put my average daily range on real quick so I can shoot for realistic targets. So our average daily range is currently 346. For 369, we've already hit 100% of our average daily range, and it's not even the open yet. So we're going to expect some pullback, right? And so far, like to make it up to this target, we would have to have a 486 handle range day, which is feasible. It's doable. We've seen it plenty of times. However, now we've already hit 100% of our average daily range, Jerry, did Japan have news last night? Was it their? It shouldn't have been their decision. That's on Friday. What kind of Asian news do we get? All right. So we know that our average daily range, our average 10-day range is 346. I know. It's pretty wild. Here's what we're missing right here. Our average weekly range, our average 8-weekly range is usually 1,095. We've only hit 41% of that for the week, so I expect today and tomorrow to be very, very bullish. So, hang on. Okay, so now let's talk about what that looks like. We already hit 100% of our average daily range. We've only hit 41% of our average weekly range, right? What can we expect? We can expect a hella ranges, a hella trend day between today and tomorrow. So, what has to happen, right? Just like on the 5-minute chart, when 9:30 to 10:30 opens up, you need to be following it with a box. And the moment it breaches this midline, right, you get trend day out of your brain. But this has to be on a 5 or a 10 or a 15-minute chart when you do that. If we can't breach the midline, right, we know that this market is hella strong and there's no chance for pullback, so we don't sit here and short the shit out of the markets. Right? Because remember, I told you guys about this right here. We either have a V-shaped puke day, V-shaped puke, V-shaped puke, which has been like every day forever lately, V-shaped puke, V-shaped puke, right? So what I'm talking about, as 9:30 opens, you come up, you follow it, it comes down, it breaches this midline, and then we follow it, it breaches the midline again right here. It breaches, so we don't have many expectations for a trend day. On this day, this is a V-shaped puke still, right? But we did breach that midline, right? Forget what happened this day, right? But we're looking for these kind of days. Oh, dumbass! Like this is from 9:15. So here's a good example of what we're looking for. This is a 9:30 right here, and as price comes down on this one single candle, right, we're following it until 10:30. Right there's 10:30. We never in live markets came back and breached this midline. We can expect the trend to continue. And then if we're on our hourly charts with our 5-9 boxes up, what does that look like? It looks like this. We're respecting previous hour midpoint, stepping above and finding footing on the 5-9 box, and we're just trending up, right? So now that we're doing it today to see what's realistic and what's not, to see if this 50% short probability plays through, the first step is between now and 8:30, we're going to be paying attention to, is the market starting to get weak? Can it breach this 3 to 4 o'clock midpoint? Right? Is this market weak? Can it come down and breach this Asian midpoint? And then when 9:30 opens up, right, we're paying attention to, can we breach the 9:30 to 10:30 midpoint? Does this make sense? Because then if we can do that, like let's say the 9:30 opens up here, this is the current range, price comes up, and then it breaches that midpoint of the 9:30 to 10:30 range right here, then we can expect a deep retracement or a retracement or a pullback or whatever we want to call it. Our first glance after we breach the 930, 1030 midpoint, we automatically look at this London midpoint from 3 to 4. Can we get there and breach that? That will alert us that if we can breach that London midpoint, that we're going to hit that London low, and then we're going to expect for a price that either net between this London low and this Asian midpoint is going to net. So if I throw a ball or if I kick a soccer ball into a net and it's a tight net, what does it bounce out of as such, right? To close the day. Does this make sense so far? All right. So let's finish our projection-based probabilities. Because this is outside of the average daily range, right? This is at 486. We're going to use the vet to make some more probabilities in between here and here, right? And then we're going to put some probabilities on this London midline and such. So how would you get in when it already is just ran? I'm going to talk about that in a minute, Future Millionaire, because that's a really good question. How do you get into a trending market when the shit don't pull back? All right, so now we're going to use the vet. Yesterday was Wednesday. We used the flout. So from 1545 to 1615, 30-minute cycle. That's going to define, let me erase this. This is noisy. All right. So that's going to define these blue lines is going to be what we define, what we're going to anchor off of, right? So now we're going to put the standard deviations. We want a probability. Actually, let's do it off of this hour that we're currently on. Let's say from 4 o'clock to 6 o'clock. That way it's more realistic to where we're at. All right, let's go 5 o'clock. Let's go 5:30. There we go. Okay, so now we're going to put our projection levels on. All right, 2.5. 0506. Oh, today's Thursday. There we go. All right, let's go a little bit higher. Let's go 4. Let's go 5. It looks like the middle. 66% probability of first touch. So I want to ask you guys a question. What was the first clue this week that we were going to head higher for the week? Does anybody know? The first thing was we started the week above previous month 50% in NFP Friday. The second was when we took out previous week high 2 days ago. Yes, we expected a pullback, but okay, so this midpoint right here has a 66% probability of being returned to. Right, but now if one side gets touched, the probability of the other side being touched is only 40%. Exactly, Jonathan. So we're going to put 40% here, knowing that, damn it, knowing that if we hit this one first, then this has a 40% probability of being touched. If we hit this one, then that's a 60, and that this has a 40% probability. Yeah, the flout's already played out. Everything's played out already. It's almost like worse than yesterday. So we need a probability of this right here, this Asian mid. So what we're going to do is going to drop this down to 8. Nope, let's make it 10. Now let's make it 15. Let's make it 20. Let's make it 18. And let's make it 17. Close enough. All right, and now this has Asian mid at this time now has 19,743. Now it has a 46% probability of being hit. All right, out of the last 15 weeks. If we wanted to look farther back, right, we could go and do this on the 15-minute chart. Let's do it on the hourly chart. So we're going to move this to 15, and it's going to give us the last 47 weeks. If we want it even more, we could do it on the hourly, and it'll just look back farther in time. And I broke it. Because this isn't a 1 hour range, so this would have to be set to 5 o'clock. And now you can see out of the last 194 weeks, this Asian mid at this 10 standard deviation from the 5 to 6 now has a 23% probability. All right. So now we're going to put, we've got our average daily range on. Just back on a 15-minute. We know that our 4 to 8 on a Thursday has a 0.35. Well, it's currently at 0.38. So we know that we'll kind of overextend it for this time frame. So out of the last 47 Thursdays, it on average moved 0.35%, right? From 4 to 8 o'clock in the morning. So now, from 8 to 12, it usually moves 1.05. All right. 1.05. And then this has got a 0.89% from 12 to 1600. This is going to be an extreme trend day. And that is very unrealistic to move 677 handles. Right now, there's a 61% probability that 9:30 to 10:30 will be above London's low, so it looks something like this, and then maybe we get an afternoon pullback like that. So honestly, because this is statistically the highest probable scenario, right? We got a 61% probability of being above London low, so that would look like between there, or there. Like we'd be above London, would be above the midline of London, or would be above the London low, like this, right? And then there's a 50% probability of us shorting from 10:30 on, which would look like this. That this is the highest probable scenario within this range. I'd say the key to being successful today is going to pay attention to, don't try to listen. The worst thing that you can do is sit here and say this is overextended and to continue to short this. You're going to blow yourself up, right? However, what we can do is we can pay attention to these midpoints of the London, of the New York, as that they play out to see if they are respected. And here's another thing, right? Right? I want you guys to watch right now as we approach, right? We're going to go to our live chart, which has the previous hours and the midpoint. As we approach this structure high right here, which is right there, we just wiped it out. Let's see if we can breach previous hour midpoint. Let's see if we can step below the 5-9 box, find footing, and breach this midpoint. And you're going to use these to kind of guide you where the price is going to be. Right? So we know that this has an 82% probability of being returned to. And so, like, let's say we are looking for a reversal right now. Let's move this out of the way. Because remember, all these 15-minute lows have probabilities, and they're high probabilities because of the time of the day that they formed. But right now, we're going to pay attention to this structure low, right? First step is we need to get below this 5-9 box and this previous hour mid before we even can consider being a short seller. Because if you try to short this without, this is the alert, the confirmation is previous hour midpoint. And then we can start selling. Oh, I see how they're printing. They're printing beautifully. So especially for the ICT community, like you guys know this, right? A higher time frame level, DR community knows this as a higher probability level, right? But we have reached the level right here. So now we sit on our hands. We don't short this blindly. We've got the higher probability level, which is the high of the 1800 to 06, right? So before we sell into this, we make it give us confirmation. Right now, the alert will be getting below this 5-9 box, right? And then the confirmation will be previous hour mid. And then how do we do that? Like, what are we targeting? This just shifted H4 momentum up. So we know H4 momentum, daily momentum, weekly momentum is all up. And we're counter trading. We're countering. This is when you draw out your 4-hour range. So from there to 02, which is right there. And if you did sell this, where's your target? This midpoint. This midpoint right here. Right? And then you pay attention to this midpoint of the previous H4. Do we find rejection of it? or do we just swipe right through it? If we swipe right through it, right then our next target is here, right? So now we're about to have a new 30-minute, and where are we? We tested the 50% of this hour's range, which is this midpoint, and now I'm going in to make some more highs. So whatever you do, like, listen, what's the old saying, Jerry? The market can stay solvent longer than you can be. How's that saying go? The market can stay irrational longer than you can stay solvent, right? Every time you want to short without an alert and a confirmation, or every time you want to go long without an alert and confirmation, I want you to remember this. The market can stay irrational longer than you can stay solvent. So there's no sense blowing your account out. Yep, exactly. So, future millionaire, if you're still there, I want to walk you through how you do this, right? Right? How would you long this, right? This is why we have previous hour mid in these 5-9 boxes, right? In reality, if this probability wasn't here and I wanted to add to this trend, like I would have added right here at the midpoint, because I know, right, we're above previous hour midpoint. We need to step above the 5-9 box, come back and find this kind of signature, this kind of footing right here. Whether it's at the high of the 5-9 box, the mid of the 5-9 box, the low of the 5-9 box. Yeah, exactly, Jerry. Jerry says the market will tip his hand with big displacement if it's a short. Exactly, right? So what he's talking about is what we talk about all the time. It will be obvious. It'll be obvious destruction. Just like when I show you guys this stuff, let me hide the drawings, right? We're going to point out the low of the day, right? Low of the days are obvious. They're obvious. Look at this. This is obvious, right? You see how it drew down and sucked it right back up? That's obvious destruction. That's obvious reversals, right? When you see a big candle like this on the higher time frame and we instantly give it back, it's obvious, right? This is an obvious low of the day right here, right? We came to the top of Asia and then we completely sucked back into the range, right? Obvious, right? This one, 830 rips up. What does 930 do? It rips down. Obvious high of the day, right? You have to wait for the destruction. Like one of my good friends, David FX4, right? He'll tell you all the time, right? You have to wait for the obvious destruction, and so the eager hands will get their faces completely destroyed. You have to wait for this to just rip completely up, take out those highs on the daily, and then suck back into the range. Well, what does that look like? Let's say like these are the highs right here. This will rip up, and then within the same fractal, it will come down, take out the 5-9 box, test this, or even go past through here, come back up and find footing, and that's where you're trying to enter, just to go down low, right? You guys know this. Like this is like the 2022, or like, this would be a failure swing, right? Actually, it wouldn't be because your breaker would be right here, right? Around the 5-9 box. So listen, I know all the lingo. I've back tested all the breakers, all the failure swings, all of it, right? And we use these 5-9 boxes because that's the highest probable time of the hour to incorporate those PD arrays. That's going to make those PD arrays. So your job is to collect the data around this and to pay attention to this objective minute 5 to minute 9 to see where the trade comes from within there. Good morning, what do you mean by 5-9 box? Wondering. Brother, like I talked about these minute 5 to minute 9, minute 5 to minute 9, these blue boxes are minute 5 to minute 9, right, of every single hour. So instead of looking for PD arrays, or instead of looking for supply and demand zones, instead of looking for single prints or excess, right? Instead of looking for these objective things on these candlestick charts, I use minute 5 to minute 9. And then why do I do that? Because I can measure MFE and MAE away from that. These, just like midnight is every single fucking day at midnight, is a constant variable. Minute 5 to minute 9 is a constant variable. Something that I can measure actual data around. Just like the ICT community doesn't realize it, but the most powerful concept that Mr. ICT himself has given you guys are the macros, right? Because each macro from minute 50 to minute 10 of each hour, that's a constant variable, and each macro has a task and a purpose. 8:30 to or 8:50 to 9:10 macro that has an accumulation purpose. 7:50 to 8:50 or 8:10 has an accumulation purpose, so it's building liquidity, right, for the 8:30 and the 9:30 to come transact near it, right? The 9:50 to the 10:50 that has an action associated, right? That action is to raid external liquidity or fix internal liquidity and efficiencies. Same thing with the 10 o'clock macro, 11 o'clock macro, and 12 o'clock macro, right? If you haven't done that on the higher time frame, by the 10:50 to 11 o'clock macro, you probably should sit on your hands, because your whole New York AIM is designed to be an accumulation, so the move can happen in the PM, right? Find fixed variables, and then go find a code nerd buddy, somebody real fucking nerdy, right? Like somebody who knows, since 13 to 16 years old, they didn't want to play video games and chase chicks. They wanted to learn how to code. You need to find one of those friends. Because now what you can do is you teach them what you want to see, and they code it up for you. And then the beauty happens. Then you're able to pull concepts that you're learning from these gurus and gurus and see if it's actually sustainable and true through time. And then you build your risk profile. All right, any questions? Because I do have to jump. I got to write my newsletter. I got to wake up my daughter. And then I have to pull some more RTY data. Jerry, I'm pulling all the 10-minute data for RTY right now. RTY might be my... Just like I told you guys in July, you should be looking in the bond market. I'm going to tell you right now, like in the next 6 months, I'll probably be more primarily focused on doing this with RTY than anything. I did the same thing. That's why Quantum Wix is my best friend, because he's the nerdy nerd. Jerry. All right, any questions before I jump? All right, what are we going to pay attention to before we start shorting this market? We got to have a what? An alert and confirmation, right? What are those alerts and confirmations? What did we say was going to be the alert and confirmation? Every single day at 5:30 EST, G-Man. And guess what? You can go to all my lives, and you'll see that I don't change my systems whatsoever, right? This screen right here is designed to put the highest probable trade on my chart. Doesn't mean I trade it blindly. Everything has an alert and a confirmation, right? So when I trade, like right now, right, I know I'm at structure stat 2, which had an 82% probability after 0.6 of getting a hit. Well, guess what? Now I know that structure stat 1 has an 87% probability of being returned to. I'm not going to short this blindly. I'm going to wait for the alert and confirmation. So like right now, if we get below previous hour mid and 5.9, I will engage with 2 MNQ, right? And then if the next hour opens below this hour previous midpoint like this, and the 5.9 box is going to appear somewhere like this, right? And this indicates a true trend. Guess what? Now I'm going to slap 3 minis on it, right? Or micros on it. And then the next hour opens up, right? Like this, right? Like I'm not the one who will just say, oh my God, let me shoot 1 mini right here. No, I'm the dude that says, you have to alert and then confirm, and then I'll put a fourth of the position on, because remember, the purpose of these 5.9 boxes are to tell you, are you in a ranging market? Like right here's a good range, where literally the midpoints of the arrows are lining up and the 5.9 is down, up, down, down. Are you in a ranging market? If you're in a ranging market, the risk profile is, hey, guess what? This is a range. I have a higher probability to the downside. But we're stuck in this consolidation range, building value area. It doesn't matter what religion you follow. It's all the same thing, right? So my job is to sell 1 mini up here and target low-hanging fruit, this low, or this midpoint, this low, right? If we expect a reversal, like you see right here, right? Let's say this had a probability to it, right here, or higher time frame draw, or whatever the fuck kind of crazy lingo you kids call it nowadays. But let's say this was where we anticipated a reversal, right? This is where you put a fourth of your contract on, and then once it confirms that it is a trend, like you did here, you wait for it to step above and find footing on, right? This previous hour mid, this is when you put a third of that contract on, and then you look for continuation. And then when it comes back and smacks you in the face, you only have so much risk exposure on, right? And you know what kind of market you should be trading in. So like right here, the moment we get, well, we didn't here. Let's say this was a reversal. Oh, that's a stupid dime. That's yesterday. But that's what I'm saying. Like you have to use these arrow boxes to identify, are we reversing? Are we in a range, or are we in a trend? Yeah, of course he's going to play his midnight snap, right? Because let's talk about that, right? Let me erase this stuff off of my chart real quick. So we're still heading higher, right? We couldn't even, we know this isn't a raid or a stop hunt, right? Because if it was going to be that, what would it have done? It would have stuck 1 to 2 minutes up in here and then sucked back down into the range. Yeah, it does really well in Dow. Like I said, I'm going to start pulling data for the Dow and the RTY, because I just want to be in those markets in the near future, right? Okay, so let's talk about the midnight trade that Austin does, right? At 8 o'clock, once he gets his little wolf, right, which measures ketosis or ketosis distribution, which is basically displacement for you ICT people. It's like speed, rate of change, abnormal movement. Once he gets that red wolf, which that's a measurement of what I just said, right? He'll take his 3 to 4 micros and target 25 handles. He's not trading it all the way back to this midnight. He's taking 25 handles. Why? Let me pull something up real quick. Let me log into my VPS. Actually, you know what? I don't even have to do that. Why does he only target 25 handles, right? And I'll do it by showing you. Let me make sure this is a good one. All right, I'm going to give you guys some alpha right now. All right. So, right here, right? He's back tested a system, aka the midnight, that said the highest probable over all FOMCs every single day for 3,000 days, the best take profit to expect is 25 handles, right? And he did this in a way where he didn't care about any news, he didn't care about any economic data, he didn't care about any price delivery. He said from 8 to 12 o'clock, does this move back to midnight? It does 65% of the time. Okay, so how do I account for that? 45. Yeah, the 45% of the time that it doesn't. Well, let's dig a little deeper. What is the average range that it pulls back? Oh, 25 handles. So whether that midnight is the 65% of the time between 8 and 12 that hits, or the 45 that it doesn't hit, he said when these wolves appear, which those are kurtosis distributions, rate of change displacement, whatever you want to call it, he said I can snag at least 25 handles out of these markets, except for on very bullish trend days. And then those are the anomalies. Those are when price has an anomaly day where we're already at 97% of the average daily range over the last 10 days, and we're going to continue going higher. But he said, in order for me to get my alpha out of this edge, number one, I have to build a risk profile specifically for it. His risk profile is take profit 25 handles, have a cost allowance of $750 to $1,500, right? Depending on the account size, and then go from there, right? If he takes a business expense, it doesn't matter because 25 handles over months of wins beats the business expense of on anomaly days, right? Not being able to pull the 25 handles. So he's not so focused on does price return exactly to midnight from 08 to 12 o'clock. He's focused on the market's not going to move parabolic forever. So when it decides to not move parabolic and it shows me that kurtosis distribution displacement down, that's when I'm going to jump in, get my 25 handles, and move out. And he does it in a way where he'll start with 3 micros, and if it continues going against him, and then he gets another like 50 to 100 handles, right? He'll get another bearish kurtosis. Guess what? He's going to DCA into his position, right? To pull his cost average up and to pull that take profit. He's still targeting 25 handles, but that moves up as well. And his cost allowance of 1500 will move down, right? Just like I'm going to give you guys some alpha. This is RTY. This is between 9 and 10. Over the last 2,000 days, it has an 85% win rate and is worth about 0.18% range, right? So knowing that, right, we'll say that this is the 9 to 910. And we know that this range right here is on average 0.18, right? And that price, once it breaks out one side of it, has an 85% probability over the last 2,000 days of returning lower and hitting the other side of this range. So my job right, to take advantage of this edge, right, is to separate from this breakout of that 9. Let me write this in. The 910. Right, is for me to sit here and wait for it to break out on the 10-minute chart. So I need on the 10-minute chart a 10-minute close outside of this 9 to 910 range, right? And then for me to collect the reversal data on, let's say this is 1% higher of that 10-minute confirmation. Let's say this is 50% or 0.5%. Let's say this is 25. Let's say this is 75 right here. So your job, we found the edge. This is the edge that we know that 85% of the time, if we break out on one side and confirm on one side on the 10-minute candle, right, that there's an 85% probability of us returning to this low. So your job now that you have the edge, is to collect reversal data. How many times did it make it to the 0.25%? How many times did it make it to the spot 50? The spot 75? The 1%? Right? And now you're going to build a risk profile around that. So if majority of the times over the last 2,000 days, it moves to the 0.25 and then reverses, then we know, let's say the confirmation candle was right here. So a 10-minute candle closed outside of this 9 to 910 range from the close. This is 25, 50%, 75, and 1%, right? And then we're collecting all of the data, right? Where, and I did a Substack article about this using the Asia range. It's like Sergeant's Time Training 2 or 3, I believe. Right? You're collecting all of the data. Move, you fuck. All the reversal hits. What the? I'm not doing this. Fucking cunt. Alright, so all the reversal data, like if majority over the last 2,000 days, yes, we understand that 85% it hit right here, but how far up did it have to go before it reversed, right? And then you're going to build a risk profile off of that. So we know that, let's say this was a confirmation candle, right? And this is the target, right? Right, so we know that majority of the times, move this up for the sake of the experience, right? This is the first entry of that, whether it's a mini, micro, whatever, right? Now we want to DCA into the position even more once we hit, because you're trying to find that sweet spot, which in this case we'll say 50% is a sweet spot, and 25% is a sweet spot, 50% is a sour spot, right? So it's saying that all of our reversal data told us that majority of the time we reverse around the 0.25% before returning to the other side of this range. So our first entries here, our DCA will be right there, right? And then the 50%, so like the reversal data tells us that once we hit this 50%, it's more likely for us to go to the 1% than to go to target, right? Then we know, so if we DCA right here with 3 micros and we DCA'd another 3 micros right here, then price hits the 50%, we know that now we're not DCAing for more profit like we did when we DCA'd at the 0.25%. Now we need a DCA to get our TP to break even so we don't bury the stops, because you DCA into a loser for two reasons: to either get more profit and pull your cost average up and your take profit up, or to just completely go to break even, right? So if we hit 50, now we're going to have to DCA 6. Our cost average will pull up, right, like this. And then what we have to do, right, once we hit that, right, we pulled our cost average up. So let's say it went, cost average got pulled to right there. So on the retracement, it breaks this, and then we're pulling our take profit completely up, just like that, right? So when we get a retracement down, it breaks this and pulls us out of the trade, and then it continues to 1%. Does this make sense? And that probably was confusing as hell for all of you guys. I need some feedback, because I probably shouldn't have talked about any of that, because you guys, that was a little bit more advanced. Yes, sir. Any questions? Did I lose you? Did y'all fall asleep? If not, I'm going to jump. Hello? Am I still on this thing? Jerry, can you still hear me? Or did I go mute? It's my worst nightmare. I have no idea how to check. I don't even know how to, like, this is how dumb I am with technology. Like, I don't even know how to see who's viewing or how many people are viewing. Like, I'm just like talking to a fucking computer screen. I have no idea. Alright, so now we're getting some displacement, right? But we have a new 15-minute candle in 2 minutes. And am I going to start selling this? Absolutely not. Absolutely not. Right? We're going to wait for it to step below, find confirmation. If this is extremely bearish, like if we are reversing, what starts in 15 minutes? A new hour. A new hour with this being the previous hour mid, and a new 5-9 box that will alert and confirm that this is a true reversal. We did get above structure stat 1 at 82%. So now we can anticipate. Damn it, I just erase everything. Or are we that high up? We're that high up. So 87% probability of structure stat 1 getting hit, which is just the highest high and the lowest low between 18 to 06. All right, good stuff, good stuff. All right, guys, I'm going to jump. Take it easy. Hey, listen, I don't care if it's one person. If it's just you and Matt, like, showing up in Jerry, like, I'm still going to do this because it's my workflow process every single day. All right, you guys have a good day, and make sure you look for alerts and confirmations before you take a trade.